Hey, welcome everybody to the 40 Finance channel. My name's Jeff Beers. I bought Etsy stock yesterday, kind of out of the blue. The market was having a little bit of a down day, and this was one that was in my crosshairs for several weeks now. And the price just dipped to an amount that I was like, you know what, I'm going to start a position here, not going all in, and I'll just have to manage the cost basis from there. So for this video, I'll share with you why I bought Etsy stock, what I'm seeing for the future, and what analysts think of this one as well. Reminder as always that my stock picks and projections are just my opinion for your entertainment. Please make sure you do your own research and due diligence before investing in any stock. And if you like stock market analysis like this Etsy video here, then please give me a like and subscribe to the channel. It really makes a big impact on the success of this channel. Thank you to everyone who's supported the channel so far. And final call out, if you're interested in joining the 40 Finance email list, link in the description below. As soon as you sign up, you'll get my 15-minute stock analysis guide absolutely free. So sign up below if you're interested. All right, so Etsy's been on my target list for a while, and this video I did here in October 18th, I kind of talked about why I was watching it. It was a stock that I would buy in the next stock market crash. And yesterday wasn't necessarily a crash, but it was a nice little downturn. And so I ended up getting in near the end of the day at $139.27. I only bought 10 shares. But I kind of had this like itchy finger where I was thinking, you know what, this stock's been hovering around 150 for a while. So mentally for me, it was a lot easier just to start a position, establish where I got in at. And that really helps me track, as you've seen many of my cost basis videos. So I broke the ice, so to speak, on Etsy stock. And if you're new to the channel, you should know that I buy stocks as long-term holds. Long-term minimum of 1 year is typically how I look at it. I missed the easy money on Etsy when it was, roughly $60 or something, and now it's in the $150 range. So I'll probably have to hang in here for a couple years, but I feel really good about the growth story. Now let's jump into the fundamentals. All right, right before recording here, Etsy stock was at $145.26. So I'm already in the green. I don't know if that's really great news, but it is up 3.96% today. Makes me think maybe I should have bought more yesterday. And even though it's ticking back up, we still have this earnings date here on October 28th. That will tell us a lot about how Etsy is doing. I have no doubt that their holiday quarter in Q4 is going to go great just by the nature of their marketplace. But the interesting thing for me and the part that I was hemming and hawing on is like, hey, how was the summer market, right? Everybody got to go back outside. It will be very interesting to watch. You see, we got a PE ratio of 113.38, EPS of $1.28, and the 52-week range there between 30 and 154. If you look up at the top of the screen, we got trailing 12 months revenue of over $1 billion. Forward PE drops to 70 on its current EPS estimates for the future. If they blow that away, Q3, potentially also Q4, that forward PE would come down even further. Cash on hand of $1 billion. Debt load of $860 million. Not horrible on the debt considering their cash levels, but I personally would be hoping they'd keep it in and around this level unless an amazing opportunity came by. All right, looking at the tip ranks dashboard to see, hey, what are other analysts thinking about Etsy? Most analysts agree that there's plenty of room to run on this one over the short term, meaning years, right? So 1 to 3 years, I think this one's an easy win. You can see most of the price targets are in that 160 to 170 range. Upside anywhere from, looks like 15% up to 21%. So generally speaking, analysts are upbeat on this one. Let's take a look at why the market is so excited about the future of Etsy. All right, I'll apologize in advance. This is probably going to be hard to see on the screen, but I'll just read it off. This is their GMS highlights. So for Etsy, that's gross merchandise sales, and that is a metric that they focus on very heavily. GMS growth, excluding mask sales for Etsy Marketplace, were up 93%, or $1 billion year over year. Now, why they're talking about the mask thing is something that really concerned me. So as you guys probably all lived through in the lockdown, severe shortage of masks, you couldn't just walk into a store and purchase surgical masks or anything like that. So you had some sort of COVID entrepreneurs, right, who just made masks, those that were good at sewing and other different skills. They made masks on Etsy, and it was one of the few places online that you could get it, and you sort of got it from a trusted source in the sense that you could see who the creators were, you could kind of read about their store, what have you. So it was a boom, but as much as that's good news, as an investor, that was actually a primary concern for me, how much of Etsy has moved because of this mask influx. And as we dig through the numbers here, you'll see that, yes, it was a nice little boost to the bottom line, but I'm really excited on the way Etsy has used that opportunity and turned it into a catalyst for the rest of their marketplace. And they addressed the fact about the mask sales repeatedly in their earnings report, which is kind of refreshing for people to talk about the elephant in the room. So second highlighted line there, excluding masks, homeware and home furnishings, our top category was up 128% year over year, jewelry and accessories up 50%, and craft supplies up 138%. So again, here they're highlighting the concern and say, hey, look at homewares, right? Look at home furnishings, jewelry, craft supplies. They're up as well. We're not just a mask factory here. All right, scrolling down to, I guess, the third line. In the second quarter, the Etsy marketplace delivered 11.5 million new buyers and 7+ million reactivated buyers who haven't purchased in a year or more. So this is obviously phenomenal that you're adding 11 million buyers and 7 million reactivated buyers. Very healthy for the marketplace. The marketplace doesn't win unless there are buyers. We all know that from the stock market. Now, looking down, gross merchandise sales from paid channels. So this is advertising, right? Paid channels was 21% of overall GMS in the second quarter. That has expanded 600 basis points compared to the second quarter of 2019. Now, even though that's paid and they have to spend money, I personally like what this is telling us, which first of all means 79% of it is organic. And then this 21% from paid shows us that the advertising spend was engaging and brought people back, and we'll go into that in just a little bit. I like the numbers that I'm seeing from this advertising or paid channels line. Last thing on this one, consolidated active buyers grew 41% year over year, and active sellers grew 34%. So that's a healthy balance. You want more buyers than sellers at the end of the day, but don't forget they have more buyers than sellers. So if buyers grow 41%, again, there's more of them, right? It's a bigger clip to the bottom line. Sellers growing 34%, that's good too, because everybody who starts a store, right, and they're selling whatever they're selling, what do they do next? They go on to Twitter, Pinterest, wherever, and they say, hey, look at my Etsy store, or hey, mom and dad, buy something from my Etsy store. So that's that organic wheel that spins with Etsy, and I think that there's a lot of opportunity there. All right, so here's a few slides from the investor report, things that kind of get me excited. I'll just share them with you. This is back to GMS on the right side, GMS per active buyer. And again, super healthy trend line. You're going from 2019, you had about $100 GMS per active buyer. Now in the second quarter of 2020, we're up to 106. So that's very good news. And off to the left, they've got some metrics on buyer frequency. And I really personally like that they're focused on frequency, right? Repeat customers are your best customers. You cannot find brand new customers all the time, forever and ever and ever. One-off sales isn't going to cut it if we're going to hit some of these growth goals. So they are really focused on re-engaging existing customers, and that was a real unlock for me. If you look down at the sort of white box there, repeat buyers, 2+ purchase days per year, you got 26 million, which is up 51% year over year. So up 51% on repeat buyers. Habitual buyers, 6 plus purchase days per year. That's grown to 4 million, and that's up 64%. So habitual habit-based buyers who come to the site and buy more than 6 times per year is up 64%. That's exactly the kind of thing that drives growth. And hopefully we get more people in that cohort. All right, this is just an overview of where the money comes from in the Etsy world. Marketplace, which is basically everything we know about Etsy, that's 77%, right? Which is listing fees, transaction fees, payment fees, all the things that they get out of the sellers. Now, what you may have not known is off to the right there, they have a services revenue. So this is additional services they offer to sellers to help their store grow. And what's great about this line, and if you think about what we've seen in Amazon with how they're offering services to sellers, we know that there's potential here. Can Etsy make it work in their little ecosystem? And it looks like they can. Services revenue includes things like on-site advertising, where sellers pay to have their products featured, shipping labels and seller protection, and then there's other category, which I didn't dig into. Long story short, though, services revenue, 22.6% of Q2 revenue, and that is up 110% year over year. So what are we doing here? We're getting more money out of each side of the business. For every seller, you're potentially making more money from each seller because you're offering different services. Now, those services have to work. They have to deliver value. And there's a couple lines in the investor report that said, minimal dropout rate on our services category, which is fantastic. Then on the flip side, you have the buyer segment. Need to get more out of every buyer, right? And that gets back to that habitual buyer getting more and more people into that category of 4 million habitual buyers. All right, this slide here, they're just focused on their engagement and their returning buyers and the stuff that they're after. I circled a couple things, build loyalty is obviously a big thing for them, and I'm glad they're focused on it. Repeat purchase rate, so they got 45% of buyers with a second purchase within the last 30 days. That's how you start to drive into habitual, right? If you can keep people on this once a month cycle or even push them into twice a month, whatever it is, the way you do that is by showing them things that are very keen to their interests, right? So that's your email program, that's your retargeting, all the things that are listed down here. Then 9.6% of new and reactivated buyers made 4 or more purchases across 2 or more categories. Roughly 10% of new and reactivated buyers bought more than one kind of thing, AKA they just didn't come in and buy mass, for example. So you're spreading that wealth. That gives you more opportunities to bring them back from an engagement standpoint. All right, so bottom line for me here on the board, why I bought Etsy, unique platform that skipped ahead at least 2 to 3 years, like so many other companies like Zoom and Shopify and whatever. It skipped ahead. Whatever growth was trogging along for 2 to 3 years, they had free demand from the e-commerce boom, and they're capitalizing on it, at least for now. 2 there, listen, I appreciate some of the honesty that was in these earnings report. It really resounded with me. Like, hey, we hear you investors. Everyone's worried about masks. Here's what we're doing. We're not just a mask website. We've got a lot of stuff going on, and most of it's positive. That's really big when you can step up to the mic and answer the haters, and that's what Etsy's doing here. Q4 seems like an easy win. I mean, this is just my eyeball assessment here. But, user growth coming where it is, the unique gifts that they would sell on Etsy, the e-commerce / virus holiday that we're looking at when gift giving is going to be a lot different. I just like the mix that they have walking into this particular holiday. I think Q4 is easy. That's why I wanted to get in before some of these Q4 reports come out. And that kind of leads on to the fourth point there. I should have bought it earlier. Frankly, I've been circling it for 60, 90 days. But you know what? I'll dollar cost average on the dips. I think undoubtedly the broader market's got more dips in it. And so that's what I'm just going to work towards. And the cons, which I always like to share because no stock is perfect. You can poke a hole in any business plan if you want to. On the Etsy side, I would say, hey, it's not cheap. It's not a cheap stock. I'm happy, though, that it's profitable. That ticks a big box for me. And keep in mind that Etsy is profitable. Shopify is not yet. So, Shopify has a larger market probably with all the transactions that would come through them. But as an alternative to e-commerce growth, Etsy makes a decent proposition just from their profitability. Then we've got 2021 there. There's no other way to slice it. They're going to have tough comps. Now they're growing, right? But you saw this huge surgence in your marketplace. Meeting those numbers next year may not be easy. That's why it's so important to do the things that they're doing, which is, the habitual buying, bringing in new revenue streams with services. They're going to have to work hard to comp 2020 because some of it was free money and that may not be around in 2021. So just know that it's not an easy win for next year. That's why I'm probably in this one for multiple years, and I'm perfectly fine with that. And last point there, I didn't talk about Reverb, but they basically bought this music instruments kind of marketplace as well. New instruments, used instruments, DJ mixing stuff. I couldn't quite wrap my head around all of it, and I didn't see a lot of call outs in the investor report. They see a lot of synergies with how that marketplace runs and what they can learn from it. So I'm just going to trust them for now. Hopefully, though, when we get into like the annual plan at the top of 2021, we can dig more into Reverb and say, hey, what is this actually doing for the business? Where does the synergies come in? So it's not necessarily a con. It was just one that going through the reports, I was like, oh, wait, what's this? And it didn't strike me as an obvious win, but perhaps it is. All right, guys, so that's my take on Etsy. I'm in right below 140. I will definitely be looking to pick off more shares over time. Probably for me, I'm in that 50 to 100 share range as far as what I'd be looking to invest in Etsy for now. So we'll see how it goes. A lot of it depends on market pricing. If we spike back up, then I'm probably not going to buy for a little bit because I just believe, if you watch my videos, that we have more downturns ahead in the short term. I am optimistic about stock market returns in general over the long term, but I do pick my spots for dips when investing in companies. All right, guys, hope you have a great day. Please give me a like and subscribe. Makes a big difference. We will see you on the next video.